Hi, good week to all. This is Calvin here again. Welcome to this week latest edition of our weekly technical outlook on the major stock indices for the week of 20th of May and 27th of May 2022, where I'll be covering the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German top 40 stock indices. So before we jump into the latest trend bias and key levels to watch for this week, let's take a look at the disclaimer slides first. All right, okay. So before we jump into the detailed technical picture on the major indices, let's take a look across the globe on the momentum analysis across the US stock indices, the European stock indices as represented by the German DAX, as well as the major Asia stock indices represented by the Seng and the Nikkei 225. So let's start off with the S&P, the US stock indices first, which is the S&P all the way down to the Russell 2000. So you could see last week was actually another week of dismal week or lackluster performance on the US stock indices. As you could see on, they are actually the worst performer among the pack, with the SPX 500 down by -3%, the Nasdaq 100 down by -4.5%, the Dow Jones -2.9%, and the Russell 2000 -1%. So if I were to compare last week performance with its prior 4-week average, we could see that actually last week performance surpassed its prior 4-week average to actually indicate to us that an incremental increase in downside momentum. As you could see the difference column over here, whereby I get last week performance, I minus off its prior 4-week average. So what we could see over here is that actually incremental downside momentum is slowly creeping back into the major US top indices, with the exception of, very interestingly, the Russell 2000, where last week performance actually fared much better than its prior 4-week average, giving a positive value of plus 1.68%. And another thing to highlight over here is the Asia indices actually has started to outperform against the rest of the world. So you could see the Hang Seng Tech Index, which represented a China big tech stocks, Hang Seng Index as a proxy for the general China mainland stock market, up positive plus 4.1%, positive plus 6.1%. And what's interesting over here is managed to surpass its prior 4-week average, give us an incremental positive value of plus 6% and plus 7.4%. So what it means that over here is that downside momentum seems to be starting to reduce on the Asia Pac indices, and also taking into account of the Nikkei 225 as well, where it managed to actually have a better showing last week at plus 1.2% versus its prior 4-week average of negative 6.2%, giving an incremental positive momentum value of plus 1.8%. Pretty much unchanged for the German DAX index, which is represented by which is a representative of Europe. Almost the same as last week performance is negative 0.3% compared to its prior 4-week average of negative 0.2%. So all in all, what I could see over here is that the weakest of the pack still lies with the US stock indices. But however, the downside momentum that was seen in the last 4 weeks or so, or 6 weeks or so, has started to actually dissipate in the Asia Pacific indices. So what we could mean over here is that even though the US itself is still pretty weak, but given a momentum analysis across the globe, we may start to see a more or less a kind of a residual push down on the US stock indices, which could actually translate to a potential multi-week corrective rebound coming into play. So later I'll share with you more on details on the technical chart. All right. So now, before we go into the technical chart over here, is that let us quickly glance through. Sorry about that. Let me escape first. Let's take a look at the this performance. Okay, let me do. Okay, let me from current set. Yes, sorry about that. I got a large it. So this was actually last week performance on the 11 different S&P sectors. So out of 11, 3 of them are in the green. So what we could see over here is the energy, the healthcare, and the utilities outperform. Energy being, we mentioned about 4 weeks back, this is the sector it still has showing signs of persistent outperformance, all thanks to a pretty much resilient oil prices that still remain supported. in its near-term, medium-term range, pardon me, in the medium-term range support for WTI crude. So giving a bit of boost for energy-related stocks that is kind of a outperforming on the average in the last 4 to 6 weeks. So what we could see over here, the weakest are still the information technology sector, the consumer discretionary as well, which is negative 7.4%. So we did highlighted in my social media tweet, which is my Twitter page over here, is that what is the culprit is because due to this price shock that was actually being triggered by this share prices of Walmart and as well as Target due to their respective last week guidance. All right. Okay, now let's jump into the technical charts that I'll share with you all. Okay, so first and foremost, right, let's take a look. Okay, I hope that you all could see. Okay, let's take a look at the SPX 500 first. So let's take a look at the daily chart before we jump into the strategy chart, which is the 4-hour chart. So what we could see over here is that in this daily chart over here, the SPX has indeed shaped this push down ever since it's break below that 50-day moving average on the 22nd of April. And what's interesting is that last week it hit the upper boundary of our support or upper boundary of our support target at 38.40 before at the end of the week it managed to actually shape a recovery on this instance itself over here. So what it could means over here is in terms of this residual push down over here is that we could, in terms of Elliott wave, it actually imply to us one more leg of down move. We could see this is potentially a wave one, wave two, and a wave three over here. So let's go take a look at the 4-hour chart. So right now it's actually shaping that residual push down to complete this potential wave three. So if I could do a Fibo projection target over here, what we could see is there's a cluster of interesting extension level coming at 37.20 itself over here. And what we could see over here is that potentially we could actually see a wave one, two, three, four, five, six, seven, eight, wave 9 of that tree. So all in all, right, what it could mean is that it's kind of a residual down move to complete this wave 3 before a potential multi-week corrective rebound to take shape. Very similar the one that we see earlier in late February to late March this year. So all in all, what we could do over here is that I will actually tighten the key medium-term pivotal resistance for this week to 41.40 and continue to play this potential push down, which is potential a residual one, before it starts to shape a multi-week corrective rebound to actually take shape. So playing this potential residual down move towards this 37.20 slash 37.20. But however, if we start to see a bullish clearance with a 4-hour close above 41.40, then all bets are off for this residual push down. Then this is where we will start to see that multi-week corrective rebound to actually take shape to target the next resistance at 43.10, followed by 45.20, which is this descending resistance from the high of all-time high of 5th of Jan that is capping previous rebound on the 30th of March, and also this swing high area of 5th of April and 21st of April that confluence with this resistance at 45.20. Now, very similar move on the Nasdaq 100 as well. So we could see the Nasdaq 100 over here right now is coming very close to this 10,960 level. So the 50-day moving average is acting as a resistance at 13,580. And we could see the recent acceleration of this down move actually take shape after the bearish breakdown of this former swing low area of 14th of March and 24th of February coincide with 13th of May 2021 at this 12,960 level, where this last we call it down acceleration in price action took shape after the breakdown below 12,960. So given that 12,960 psychologically it should be an intermediate resistance level to actually maintain this ongoing bearish bias. And also on top of that, if you were to draw a Fibo retracement taking into account of this multi-week broad move that has taken shape or the multi-band broad move that has taken shape from end of 30th of March all the way to last Friday's swing low is at 38.2% retracement as well. So all in all, right, if you were to look at the strategy chart for this week, in the short term, it's still what you call it, or the short term is still oscillating between the upper boundary and the lower boundary of this descending channel that is in place since 5th of April 2022 high. And what we could see over here is that same thing. It based on Elliott wave, actually shaping the residual down move of this impulsive bracket wave 3, which if you start from the wave 2 over here is 1, 2, 3, 4, 5, 6, 7, 8. Then is shaping this wave 9 as well. So with a cluster of Fibo extension level at 11,000 slash 10,960. So I will actually tighten the key medium term pivotal resistance for this week to 12,960 to play down this potential residual down move towards this next support level at 11,000 slash 10,960 before we start to see a potential multi-week corrective rebound to take shape, very much similar to the one that we see on 15th of March to the 30th of March this year. So, but however, if we start to have a clearance with a 4-hour close above 12,960, then I would say that the residual push down scenario has been invalidated to kickstart that corrective rebound towards 13,580, followed by the next resistance at 14,315 over here. Now, moving on next to the Hong Kong 50 index. So I could see the Hong Kong 50 itself seems same pretty much unchanged after its rebound that actually taken shape on 12th of May from 19,200 slash 18,990. But price action seems to be stalling at this descending resistance that we draw from the 10th of February high 2022 that has kept previous rebound in check. All right. So this intermediate resistance is at 20,780. So this morning it actually tried to test again, but what you could see right now, bearish reaction kind of resume at this 20,780 level. So still pretty much unchanged. I don't want to keep it so tight. So the key medium-term pivotal resistance, I'll keep it at a higher level, swing high area, which is at 3rd of May to 5th of May 2022, which is at 21,300. Pretty it's the same as last week, key medium-term pivotal resistance, still looking to play that push down to retest 19,200 slash 18,990 for this week. So, however, if you have a 4-hour close above this level, then we will start to see a what you call it, a start of this multi-week corrective rally to retest this major range resistance of 23,000 and 23,380. So just a recap, what's this major range resistance? It's actually defined by this former long-term ascending trend line support that was in place, that was taken off from the low of the great financial crisis low, which is October 2008, broken down earlier this part of the year, which is at 20th late February 2022, now turns into a pullback resistance at 23,000 slash 23,380. So that's how I define that major range resistance that we are watching on. So overall, yes, even though we may start to see this potential counter trend rally or multi-week rebound after hitting that 20, retesting that low of 29, retesting of this low at 19,200 slash 18,990. But overall, the long-term structure picture are still pretty much bearish, with the possibility in the 3 to 6 months time frame to actually went down as low as 16,140 slash 15,650. So that's a longer term, bigger picture. All right. So now, going forward, will be the last Asia major indices that I'll share with you all will be the Nikkei 225. So if we could take a look at the Nikkei 225 over here, it's still pretty much unchanged. It's still stuck within that descending range configuration. Okay, let me share with you all. Okay, so if you look at the daily chart of the Nikkei 225, it's still stuck within this range configuration since the high of 30th of March, between 27,760 and 25,700. So 27,760 is defined by this former the swing high area of 21st of April, and as well as this descending trendline resistance that has kept previous high at 30,716, which that's close to a 30-year high for the Nikkei 225 at 30,716. Previous rebound on 16th of November last year, 5th of Jan this year, and as well as 30th of March this year has failed to surpass this descending resistance level, which is pretty much which is a clear significant level to watch, which is now acting as a resistance at 27,760. So if we go to the 4-hour chart that we have, the strategy is pretty much unchanged. So what I do over here is, even though we in that descending range resistance, from the minor high of 21st of April 2022, which it seems to be oscillating within this minor descending channel. And what's interesting over here is that current price action managed to shape a bearish reaction right after a retest as this minor descending channel, which is right below this swing high level of 27,120. So pretty much unchanged. I will still use 27,760 as my key medium term pivotal resistance for this week, looking for a potential push down to retest 25,700 slash 25,410 level. And however, if you have started a 4-hour close above 27,760, a bullish breakout with a 4-hour close above 27,760, we would actually start to see that multi-week corrective rally to retest this swing high area of 30th of January, 18th of January 22, and as well as 30th of March 2022 at 28,680. And maximum level, we could actually travel much higher towards 29,390, which is the swing high area of 5th of Jan 2022. Right, provided that we have a 4-hour close above 27,760. Okay, now the last one will be the DAX or the German 40, which is a representative of the European stock indices. So this one pretty much unchanged. If we were to look at the daily chart over here, it's still capped by this descending trendline resistance taken from close to its all-time high area of 4th of Jan at 16,280. So now acting as a resistance at 14,320, with also the how daily RSI also reacting off from a key corresponding resistance level at the 56% level. So on the 4-hour chart last week, we have 4,320 as my key medium-term pivotal resistance. So pretty much unchanged. I will leave that as my key resistance level to actually maintain this bearish bias for a further push down towards 13,600 slash 13,340 on the German 40 index. So, however, if we have a clearance above a 4-hour close above 14,320, then all in all, we could actually start to see that multi-week corrective rebound to actually retest 15,030 level. So, what's 15,030 level is actually the former range support that was in place from 30th of November 21 and as towards 18th of February this year. Now turns into a pullback resistance level. So overall, we still have that bullish bias for this week on the major stock indices. But bear in mind, given that momentum analysis at the start we had shared with you earlier, the US stock indices being the weakest right now is coming towards its tail end. So right now, it could potentially shape its residual push down to complete that impulsive Elliott wave bracket 3 move before we could start to take shape of a multi-week corrective rally or rebound within its major downtrend. So that's all for now, and I'll see you again in my next video.